trust me, those who are not here tonight will definitely miss something huge. The reason why I decided to wait for another 10 minutes for people to come on board is simply because I understand that a lot of people are still at work, are still on their way back from work. And nevertheless, we just have to continue because we already have the time fixed. Okay, and today's class, I tell you, is the real deal. I just have to tell you, today's class is what everyone needs to get started in this business. Okay, we've been able to cover a lot of things between yesterday and day before yesterday, and today we are going to put all of these things into practical, and I'm going to be teaching you a lot. Like I said, the exact thing you need to know to get started. I'll be teaching you basic money management as well, how to calculate pips, how to use the trading terminal, because this is where a lot of newbies find it difficult to navigate through. All right, so that is why today's class is going to be 95% practical, even over 95%. Okay, so guys, let's dive into the whole process. So for those who are joining, who have just joined us, if you can hear me, please type in yes in the chat. For those who have just joined, type in yes in the chat if you can hear me pretty well. I want to be sure we are on the same page. And today's class, you truly want to stay to the end, because every information I'm going to pass across to you guys right here is going to be really, really informative. So you want to stay behind to the last minute. Okay, thank you so much. Glad to know that you can hear me. So if you were not here yesterday and on the day one, please simplify. If you were not here yesterday and on Saturday, please signify. I want to be sure. I want to know those who are new. If you were here yesterday, please let me know in the chat. Let me know in the chat. I want to know if you have any new person in the class today. If you are new, please type in 1. If you are not new, type in 2. If you are not new, type in 2. If you are new, type in 1. You either type in 2 or 1. You either type in 2 or 1. Okay. All right. Oh, Mr. Shego, okay. Seems okay. Today's class, I will say you are so lucky for being here today, but nevertheless, you'll be able to miss 1 or 2 things based on day 1 and 2. They based on what we taught, what we've learned on day 1 and 2. So today, count yourself so lucky, because we'll be putting all of these things into practical. And of course, the video of the day 1 and 2 will be available. Okay, probably during the course of the week or so. I can't really say how quick that is going to be available, but it's going to be available, so you can take some time to watch that whenever you are free. But you want to count yourself lucky for being here tonight. Okay, so let's get started, guys. Let's get started. So I hope you guys are with your writing materials, because you definitely need to write and put a lot of things down, because I'll be teaching you a strategy you can use to start navigating in the Forex market. I hope this is clear. All right, so I'm not going to be running through what we've taught yesterday. I'm not going to be running through that today. So we're going to continue from where we stopped yesterday. So okay, great. So I hope you guys can see my slide pretty well. This is where we stopped yesterday, how to profit from the move. Okay, and we were able to cover a lot of things, and I'm so glad almost all the class really understand every information we shared about this slide. Okay, so but today we'll be moving we're going to continue with the power of leverage. Okay, leverage. We've talked extensively about leverage. So what is leverage? Okay, leverage is an amount of money required to keep a trade open. It's not a transaction cost, just an amount set aside as a deposit. All right. So yesterday we talked pretty well about leverage, and today we're going to continue from there. So what is leverage? Leverage is simply like a collateral. All right. Let's, for example, let's say you have $1,000 in your account, for example, and you want to open a trade. You want to open, let's say you want to open one standard lot trade. For you to have this one standard lot trade open, it is a must for you to have a deposit given to the broker, okay? If you are using a leverage. And of course, all traders are using leverage. 99.9% of traders across the world, both the big players in the market, they are also using the leverage, okay? But some may decide to use 10 leverage. Even if you are using 1 to 2 leverage, you are still using leverage, in as much as it is not 1 to 1, all right? So almost 99.9% of people are using the leverage, okay? So for you to have used the leverage, as you are going into a trade, okay, once you pick in a trade, either you buy or you sell, it is a must for you to set an amount aside. So out of this 1,000, for example, depending on the number of leverage you are using, you are going to set, broker is going to take a certain amount out of that account to keep that trade open. Now let me explain this. Let's say you have $1,000, okay, in your account, just as I've said, and you want to open a trade, one standard lot, okay? Now, for you to keep this trade open, broker need to take away some money out of this 1,000. Let's say broker want to take $100 out of it, okay? To keep this trade open. So once broker take this $100 out of this, you have $900 left, okay? So to keep this one standard lot running, this $100 will enable to keep this trade running. All right, I hope you are getting this, guys. This $1,100 is like a collateral you have given to the broker that, okay, I'm hoping this trade, take this amount of money, keep this trade open for me until either I hit my stop loss or take profits. I hope you understand. Now, as you have this $100 taken away from this 1,000, you have 900 left. From this 900, you can still open another trade. Any subsequent trade you open from this 900, let's say you open another one standard lot again, okay? That makes it 2. So another $100 will be taken away from this, okay? So the more you have new trade open, the more your balance is going to keep reducing, okay? Why is it reducing? Because each trade you open, you have to give a collateral for it, okay? So we are using $100 as an example right here. So the higher your leverage, the lower your collateral. Just like I've explained yesterday, the higher your leverage, the lower your collateral. All right. So now you have 900 left. You open another trade. Another $100 will be taken away from this 900. Then you will be left with 800. Remember, you have 2 trades open right now. Another one standard lot right here. Another one standard lot again, making 2 trades. So out of your balance of 900, you've opened another one, you are left with 800. So if you want to open another trade again, you the collateral is going to be taken away from this remaining balance, all right, until you either close any of this one in profit or loss. I hope you understand. So if you close this in loss, let's, for example, this particular trade run through profit and you close it in profit, then the profit you get on this will be returned back to your account, okay? By then, your collateral has nothing to do with it, okay? The collateral just enable you to keep the trade open so that the broker will not go bankrupt. It does not really mean this is your actual trading amount, all right? It's just like a collateral they have taken away from your account. So now, let's, for example, that this 800, you are able to open series of trades. Once this amount turns to like a zero, then it means you do not have more power to open another trade. I don't know if you are getting this explanation. Let me just take a few seconds to take it in another dimension for those who are new. Let me take another dimension to explain this. Okay, I have less than 5 minutes, 5 to 10 minutes to finish all the slides before we go to the practical. So we're going to spend up to 1 hour, 1 hour, 30 minutes on the practical because we need to round up tonight. All right, so now let's say this. I have $500 in my account as my balance. Now on this $500, I want to open a trade. Let's say I want to open a 0.1, which is mini lots, all right? For me to open this trade, okay, for the broker to open this trade for me, because I'm using leverage. For the broker to open this trade for me, I need to give them a collateral. A collateral is just like a sure word I'm giving to them that, okay, I am willing to open this trade. So they want to collect a collateral for me to keep that trade open for me. So the collateral I'm given does not mean is the actual amount I am risking on this trade, right? Don't get confused, guys. It does not really mean that is the actual amount I'm risking on this trade, okay? But it is just like a collateral I'm giving to them out of my profit, okay? And the profit, the collateral is based on the number of leverage I am using. Like I said, the higher the leverage, the lower the collateral. So that is why I explained yesterday that if you have higher leverage, you have power to buy more, to open more trades. The only thing you need to control to be sure that you don't want to lose more is your money management. Okay, so now let's say broker want to take $50 out of this. Okay, you are left with 400 minus 50 minus $50 to keep this trade open. You are left with 450. Okay, now with this, look at this $50 right here. This one right here. This $50 that serves as collateral to this. This is not the amount you are risking. Okay, this is not the amount you are risking. The amount you are risking depends on the pips and on this lot size. All right. So if you are risking 2% of this amount, that is equivalent to like $20 or so. So with that, you will not even lose more than $20 if the trade should go against you. Okay, let's say your 2% is just $20. So if the trade should go against you, you will not lose more than this $20. So this $50 is not the actual amount you are losing. It is just a collateral. Okay, it is just a collateral to keep this trade running so that the broker will not go bankrupt because they are borrowing you the money you are either buying or you are either selling. Okay, so because they borrow you the money, that is why you are giving them the collateral. Okay, You are selling euro USD. They are borrowing you euro to sell it. So, and you are giving them the collateral for what you are borrowing from them. I don't know if you understand this explanation. You are giving them the collateral. Take this as my collateral. Borrow me your euro. Let me make transaction with it. Once I make profit, I will return back your euro. And if I do not make profit, the percentage based on the position I have opened, I have lost it. So that is going to be part of the collateral you have given. Okay, depending on the percentage of your capital which you have put into the market. I hope you understand this. So now you have 450 left. Out of this 450, if you decide to open another 0.1, another $50 will be taken away from here. We are just using $50 as an example, guys. Don't get it mixed up. So another collateral will be taken away from here to keep this particular one open. Remember, this one is already open. So this one now, you've opened it. So $50 is needed. You are left with another 400. Okay. So with this 400, you can still continue to keep opening more trade. Okay. And as you keep opening more trades, so does your capital will keep reducing. Okay, to keep reducing until it becomes zero. And once it becomes zero or close to zero, that is when you receive a margin call. Okay, that is when you receive a margin call from the broker. So for you to have received the margin call, it means the broker will ask you to put in more money, to deposit more money, to be able to open more trade. All right, I hope that is very, very clear. Guys, if my explanation is clear, please, somebody should type in something in the chat, please. If my explanation is clear, please type in something in the chat. And if you demand any explanation, please let me know in the chat. Still waiting for your response, guys. Okay, thank you so much. Getting clearer. Thank you so much. Thank you so much, Mr. Shijani. I appreciate you for that. All right. So, guys, for those who are totally new, please, this may be a little bit difficult for you to understand, but trust me, I've been able to break these things down. As you journey along in the market, you will understand this better. Okay. For a beginner, I have to be sincere with you. Nobody can take anyone who is a total beginner to grab close to 60%. The highest you can get is between 50 to 55%. So as you journey, you get to understand a lot of things along the way. But it is important to have the better explanation so that will help you to be able to, to get every other things you come across so easily. All right. So in a nutshell, your leverage is just like a collateral you are using to open a trade. It is not the actual amount you are going to use. So no matter the leverage, number of leverage you use, what is important is your money management. Okay. So for those who are not using money management, that is why you hear a lot of people saying don't over leverage. All right. I hope this is clear, guys. So how do they calculate this? So let's quickly take away this and go back to work. So how did they calculate this? Let's say, for example, if you choose a leverage of 1 to 1,000 and you wish to trade euro USD with volume of one lot, which is 100,000 euro, instead of having to provide the full 100,000 to trade this, you will only need 1 divided by 1,000 times 100,000, which means 100 euro. So if you want to open one standard lot, let's say you have 100, for example, you have $1,000 or $2,000 in your account. Let's say you have $2,000 in your trading capital. You have $2,000. Okay, $2,000 in your trading capital. Now you want to open this one standard lot right here with the leverage of 1 to 1,000. Your deposit as a collateral for this leverage is just $100. Okay, $100 to keep one standard lot open, one lot. Okay, which means $100 will be taken away from this one, from this 2,000 to keep this particular trade running. So you are left with 1,900 to open another trade. So the higher the leverage you have, the lower the deposit, which is your leverage. All right, I hope you understand, just like I have explained. So now this is how margin is being calculated, which is also leverage. Equity equals account balance plus or minus profits. I'm going to show all of that to you on the chart. Okay, now we also have free margin. What is free margin? Now look at this. So we have $2,000 with leverage of 1 to 1,000, and we already opened one lot size, and we are left with 900. Okay, $900. Look at this, $900 is your free margin. Okay, this is your free margin. This is your free margin, which means it is free. This is the amount that is free to open more trade. All right, free margin equals equity minus margin. Free margin equals equity minus margin. Now, what is margin? Let's explain that, guys. I don't want to take much of our time. We have a video on this on our YouTube channel that you guys can watch to learn more about this, about equity margin and all of that. But I'm going to run quick one over it. So equity minus margin. So margin is the amount left. So this equity, then take it away from your margin, then this will give you your free margin. I don't want to go much into this because of our time. Now let's talk about free margin. I can get you the video to watch more about this particular explanation so you can understand because of our time. So now margin level. Margin level equals equity divided by margin times 100, which means this equity divided by margin, which is your balance, then multiply by 100. So that will give you your margin level percentage. And what is margin level percentage? Margin level percentage is all about the the leverage amount you are taking. So the percentage we start reading from 100 to 0, depending on when you will have the margin call. So if your broker says your margin call should trigger when it comes down below 20, so once your margin call draws below 20, then that is when you will receive a margin message from the broker that you need to deposit in more money. All right, so I know this may be a little bit complicated to some of you guys, but I don't want to really go deeper right here because we already have a video on that. So maybe I can get to a video to watch to save, and so to save our time, I think I have just a few seconds. Let me get you the video, guys. Just a few seconds.
Listen, if you've been trying,
I'm on it. Just a few seconds, guys.
To make money online, and check this out. This is
Okay, guys. I think that is the link right there. Please copy that link, save it up. You can watch more about leverage and margin. Okay, so that's so as to save our time, because if I want to go deeper right on this very slide, we are not going to leave in the next 30 minutes, and I don't want to take much of our time because we have a lot of things to cover. Okay, I hope this is clear. please save up the link I've just sent to you. All right, save up the link I've just sent to you. So then you can watch. It's important you watch to know more about margin, guys. It's important. Okay, so let me clear all of this. Then we can move further. Okay, now so few seconds, guys, trying to arrange everything. Okay, so yes, so let's move further. The next one we're going to talk about is how to use Metatrader 4 and 5 trading platform. All right, what we will be covering on the platform is what we are looking right in front of you: how to place, buy and sell trade, how to enter, take profit and stop loss, how to close a trade. All right, both manually and through stop loss or through take profit. And the next one is how to use basic money management. This is important, how to use basic money management. Another difficult one I'm going to be covering today is how to calculate stop loss and take profit. This is one of the major challenges a lot of people are facing, most especially some the newbies and some intermediate traders, how to calculate stop loss. So we'll be covering all of that today. Okay, on each of these, we are not going to be spending more than 10 minutes on each of them. Okay, more than 10 minutes on each of them. So you want to get your mindset open right now. And please, if you have any question, ensure you jot it down so you can be able to ask all of that when the time is due. Okay, so let's move it. Let's keep moving. So we're going to go right. Let's cover all the rest slides. Okay, under 5 minutes. So we can go into our trading platform to look all of that. So now the next thing we'll be covering on the trading platform is that I'll be teaching you out a strategy we have been using, a strategy we call the King strategy. Okay, this is a strategy with over 75% win rates, and to the glory of God, I've been able to take just 2 trades on this strategy today, and it has been able to give me close to 3% profits on these 2 trades. Okay, with just this strategy. Okay, so I'll be teaching you guys how to use this strategy and how to set up all these parameters. We already have a video about this. I'm going to be giving you the link as well. Don't worry. But for the purpose of this class, we're going to go over it from the scratch. All right. But I'm going to be so that you guys can assimilate. All right. So now let's cover the rest page. Now let's talk about 4 kinds of Forex traders. Now look at it. We have scalpers. All right. Who are scalpers? Scalpers are the type of traders that go into the market and comes out within 5 to 10 minutes quickly. Okay, and scalpers generally target between 5 to 10 pips per trade. Okay, so this type of traders are the type of people with luxury of time. Okay, those who can give their time. You want to monitor charts from morning to night, or you want to monitor chart for many hours. So this type of traders, we can take up to 4 or 5 trades per day. All right. So like I said, the more time you have, the better for you to trade. And it does not really matter. You need to put in all the time before you can trade. All right. So you need to choose where you want to belong. So if you want to be a scalper, all you need, your duration is just within few minutes and you are out of the trade. All right. The next one is day traders. Day traders target between 20 to 40 pips per trade. Okay. Day traders normally take 1 or 2 trades, maximum 2 trades per day. All right. Because it takes relatively between 5 minutes, 1 hour and H1 for them to be able to find a trading opportunity. So day traders look to take their trade within 15-minute time frame, H1 and H4. So for their trade to close either in profit or loss, it takes longer hours. for them to reach their target. So that is why it is called day trader. So this type of traders open their trade and close it the same day. That's why they are called day trader. The next one right there is swing traders. Okay, swing traders target between 5 pips to 150 pips per trade. Okay, not even 5, between 50 to 150, not 5, between 50 to 150 per trade. So swing traders are the type of trader that looks to take a trade between H1 and H4. Okay, they take their trade between H1 time frame and H4, and their trade tend to last between 3 days, 1 week, or 2 weeks. All right, and now the next one is position traders. Position traders are the type of traders that look for a long time trade. Position traders can take a trade today, then you can expect to take your profit in the next 6 months, 3 months, or 1 year. All right. So this type of traders look to take a trade on daily charts or weekly charts. All right. So that is why it takes longer time to trade. So a lot of people have asked me, what type of trader am I? I am a swing trader and I'm a day trader as well. All right. I'm not a scalper. I am not a position trader. Okay. Although I can do all of this, okay, but I mostly swing trade, both on crypto, on Forex, or otherwise. So this is where you choose where you want to belong, and your luxury of time will tell you where you need to belong. Somebody said, I would like to read your last chart. My last slide is this. Please, you may want to take a screenshot. Take a screenshot quickly. Take a screenshot. Few seconds, we need to move. In the next 5 seconds, I take it away. Take a screenshot if you need to do that. 2 more seconds, I take it away. Okay, if you want to take this also, you have 5 seconds. Today is going to be an interesting class, guys. Trust me. You have 5 seconds to do that. All right, thank you so much. Okay, so now let's keep moving. So before we go into our trading platform, let me share the opportunity we have for you guys. Okay, for those who are interested to take our professional course. Okay, after today's class, you will decide if you want to go for the professional course or not. We have a lot of content packed in the professional course. Okay, everything you need to know that will get you going, everything you need to know to call yourself a trader, because there is no way you will go through all of our videos or the professional course, and after everything, and after the mentorship we are going to be given, if you are still find yourself wanting, then something is wrong. Okay, over 90% of people who have passed through our professional course are glad today. So what we have for you guys in the professional course now, this lesson 1 right here, Introduction to Forex, is contains all what you will be learning between Saturday, today, yesterday, and what you are learning right now, and everything I'm going to be teaching you on the trading platform. So that is within Introduction to Forex. Now, the lesson 2, this is where the master class starts from. This is where the professional course starts from. Okay, mastering technical analysis. Okay, a lot of subject principle of technical analysis, how these are formed. You're going to know that. Candlestick formation, we have that in place. Identification of trend, this is so powerful. How to identify support and resistance, supply and demand zone. Okay, that is for lesson 2. Now for lesson 3, we have harmonic pattern plus king strategy. How to combine the king strategy with harmonic pattern. This is so powerful. It's within lesson 3. Okay, and for lesson 4, position size and trade management. This is where I call the powerhouse. Okay, because to become a successful trader, Money management is the key. So here you're going to learn how to use the advanced money management. Okay, because I'll be teaching you the basics today because of our time. So you're going to learn the advanced money management during this course. Okay, it does not stop there. On lesson 5, psychology of winning, how to manage your emotion and every other thing you need to know about psychology and emotion. All right. Lesson 6 covers how to develop a trading plan. Okay, developing a trading plan and what you need to know. We also have the king strategy in a dimension, in a new form where you can go deeper on the strategy. Guys, what we have within this class is, believe me, is far more than what you are looking right here. It's far more than what we are looking right here. This is just a brief of what we have in our professional course. Now, and the professional course, each of this video is a pre-recorded video. Each of these video is not less than 1 hour 30 minutes. The minimum of this the minimum hour on each of this video is 1 hour 30 minutes. We have the ones with over 2 hours. We have the ones with 2 hours plus. Okay, and we have 19 videos as well. Altogether, we have 19 videos. So you can imagine what you are going to learn in each class on 19 different videos. But we also have a file where we can share with you, where you can learn everything about candlestick pattern, the formation of candlestick pattern, and the different type of candlestick pattern and how to use them. I hope this is clear. So we have all of this for you guys, and this is so powerful. And how much did you place this? To register for this course, to have access to all this video, and the joy of this is that you can download all of this video, okay? In the nearest future, we are not going to make this video downloadable again, which means anyone wants to come, we only watch and go away. So for those who are here today and for those who will be taking this course in the, between now and the nearest future, or pending the time we will block the downloading access. You have the access to download all this file and keep it to yourself forever. All right. But remember, copyright is available. It is not advisable to share it with anyone. All right. So you have access to download these 19 videos and every other file we have for you to learn within this aspect. Okay. So how much do we place on this, guys? It is not so. It is for today, and for those who will be taking this course, this is just $150. Okay. But we have a discounted price between now and end of the week, which is going to be for $100. But for the purpose of those of you who have taken this class alone, okay, we'll be giving additional discount for just $90. Okay, so the $10 extra is an advantage for you to be a participant of this 3 days course. Okay, and this is going to be given to those of you who attended this class alone. Trust me, take my word for it. That is the way it's going to be. We are not going to put this $90 on the group. We are going to put the discount of $100 for those who are ready. And the discount is going to last between now and next week, Sunday. All right. So sorry, guys, few seconds. So sorry for keeping you waiting, guys. Need to control some noise at the back end. Okay, so for the purpose of those of you who are here, so we are giving that out to you guys for $90. Okay, and additionally, you'll be having 1 month mentorship. Okay, this is so powerful. The one month mentorship is going to be between minimum 1 hour per day in a week. Okay, once in a week, and you're going to have that for 4 weeks within a month. So after you've taken this course, you'll be given 1 month to go and finish up with your videos. Jot out whatever questions you have and every challenge you think you may have. All right, jot it down. And during this class, we are going to treat over everything, and you're going to be mentored, guided on what you are not doing right. All right, because during this mentorship, I personally am going to give you an assignment during the mentorship, starting from the first day of the mentorship class. So I'm going to give you an assignment which you have to work on and report to me, and that's going to be based on what you have learned so far. Okay, that is to ensure that you are doing it right, and you can be confident that at the end of the whole thing, you will be glad you call yourself a trader. All right, I hope this is very, very clear. So if any one of you're interested, I'm going to issue out a code in the chat right here. Okay, just put up the code. If you want to chat with the admin, just put in the code, then then I will know that, okay, you are one of the participants in the class. Okay, let me just put in the code. All right, so just put this down in case you are interested to take the course with additional discounts. This is simply for those of you who are here. King 20, just type this down. Once you chat with me, you want to take the course, just present it, then I'll know you qualify to take this in the to take the $90 additional discount. All right, so guys, that is all. Let's go into our chart. We have 1 hour plus to spend. Okay, so I'm going to be sharing my chart right now. Okay, guys, great. A lot of attention should be paid right from this moment, guys. So if you can hear me and you are with me, please, guys, type in yes in the chat. If you can hear me and every information I've shared with you is very clear, please put in yes in the chat. Put in yes in the chat. Still waiting to hear from you guys, please. Okay, all right. Yes, let's chat. Mr. James, let's chat after the class. Then you can apply for the course. Okay, then we continue from there. And additionally, you will have opportunity to chat with me, ask any question. If you have any challenge during your training, I'll always be available to answer your query, to attend to even at the middle of the night. All right, that is the joy. Okay, so now the first thing I'm going to be sharing with you guys, this is basically for those who are new. The first thing you want to do, this platform you are looking right in front of you is called Metatrader 4. Metatrader 4. If you are new, just write in Metatrader 4 right in your notes. Just jot it down in your notes, Metatrader 4. How can you be able to get this platform? The first thing you want to do is log into a broker's account, your broker's account. And for those who do not have the broker's account, okay, we can recommend, this is our recommendation right in the chat. Let me paste that in the chat for you guys, so you can just copy the link. Copy the link at the end of the class, click on any of the link to register. So that is the broker we use. So we recommend any of them you want to use. You can use any of them. So what you need to do to get this platform is to register with the broker. Once you register, then log in into your account. Once you log into your broker's account, just try to maneuver, check whichever link you can see there. You will find where you will see Metatrader 4 or Metatrader 5. They may write it as MT4 or MT5. All right, it is still the same thing. So click on Metatrader 4, which is MT4, then download it. Once you download it, install it on your computer. All right, Once you install it on your computer, this is what you see. I hope this is clear. This is what you see. So once you see this, the next thing you want to do on the brokers is that you've registered already. Inside your account, you want to open an account. Okay, inside your registered account, you go in there. There is a place you can click where to open a demo account. Okay, we have the one for live account, we have the one for demo account. Open the one with demo account. Okay, you can choose standard. All right, once you choose standard and you finish your registration, you can choose leverage of 1 to 500. You can choose leverage of 1 to 1,000, whichever you like. Okay, and choose any amount you want them to give you as a demo account, as a demo money rather. You may ask for 500, $1,000, 2,000, 5,000, 50,000, depending on your choice. So fill in the details, then click register. Once the demo is being registered, you will see you'll be given an account number. Okay, account number. You'll be given account password. All right, password. You'll be given a server. All right, these are the 3 things you need to log into this platform. So once you see all of these things, then you can now come here and process your login. Now, all this information, the moment you register, they are going to send a copy into your email address, all right, as well. Okay, so now once you have these 3 things, you have an account number, you have your password, and you have your server. So these are the 3 things you need to do. So now once you have this information, come into this platform. Now the next thing you want to do is to log in. First and foremost, you want to log in. So how can you log in into this platform? The first thing is that take a great look at this platform. Come here, click on file. Once you click on file, we have several ones under file. Then click on login to trade account. Can you see what I'm pointing to? Click on it. Once you click on it, you have this dialog box. All right. Now it's asking you for the login. The login you'll be asked, and the password is what I have just explained right now. All right, it's what I have just explained right now, which is what they're going to send into your account, your email. So the login is going to contain login numbers like this, some set of password which they have generated to you automatically, and now you'll be given a server, something like this. Okay, so you now come under the server right here. You will choose the one that is appropriate, that matches the one they have sent to you. All right, if they have sent the one with demo SC demo 03, select the appropriate one that matches the one they have sent to you. Once you do that, click save account. This is to enable you being able to log into the account without typing it again. Then click on login. Once you click on login, how can you be sure that you are in? Now, 2 things you're going to see. All the currencies right here, you will see them, they'll keep changing. All right, all the currencies right here, you see them, they'll keep changing. Who opened this? Sorry, guys. So sorry, guys. Trying to figure out something right here. Okay, something is going appropriate. All right. Just a moment, guys. Trying to correct something on the Okay, all right. Sorry for keeping you hanging, guys. Okay, need to just be sure everything is perfect. So now this is it, guys. So once you come into this place, fill in the necessary information, then log in right here. Then once you log in, two things you are going to see to be sure that you are in. The first thing is that look at all these bid and ask price. You're going to see them changing, dangling up and down, dangling up and down. So if you see them changing and you see this market watch number counting, that tells you that you are connected. You have successfully logged into your account. That is number one. The next one you want to be sure, either this one or this second one I'm going to share with you, is either come into this bottom right here. Look at what I'm pointing to. It says connection status. Click on it. Once you click on it, these are the servers. So how can you be sure that you are connected? If you are not connected, you will see this one will be in red. Okay, this green and blue live line will be in red. So that is another way you can be sure that you are connected. Okay, I hope this is clear. This is a simple way for you to grab this. I hope this is super clear, guys. If that is clear, please let me know. Time is not on our side. I need to move faster, but be sure, don't worry, I'm going to cover every information I need to cover, so you're going to understand every bit of it. Please let me know in the chat if my explanation is clear enough before I go further. And if you have any questions, please continue putting them in the chat so that we can move further. All right, so now let me quickly run over more how to use this platform. The first thing is that how can you place a trade with this? The first thing you want to do to place a trade is that we have several buttons right here. Okay, and guys, on our professional course, we have a video that details all of these things you are seeing. Okay, over 1 hour video for this alone. So you can imagine how deep it is, explaining all of these things. So you can imagine if I want to explain all of everything right here, we are not going to leave here in the next 1 hour, 30 minutes. So for the purpose of this class, the first thing you want to, after you have successfully logged into your account, indicating it right here and this place. Now, the first thing to place a trade is go to new order. Once you click on new order right here, this one right here, once you click on it, this is what you see, guys. This is where the magic starts from. Okay, this is where the magic starts from. Now, how can you be sure which one of the pairs you want to take? Which one of the pairs do you want to trade? Now, look at this place, guys. Look at this place. I have USDJPY, which means I am currently looking at, let me close this, which means I'm currently looking at USDJPY right here. Okay, which means I want to trade on USDJPY. And if I want to trade another pair, you can simply select it from here. Let's say I want to trade USD, I want to trade Euro AUD. You can simply right click on Euro AUD. Look at, we have chart window. Click on it. It's going to open in another form. Wait for some seconds, let it load. Look at it. Okay, this is what you have. So now let's say we want to trade on Euro AUD. Now we want, let's say we want to buy. So to buy or to sell, to place a trade, actually, this is where you come, click on new order. Once you click on new order, this is where it starts from. Then this is where you're going to place a trade. Now, number one thing you want to be sure you are doing is this. Look at, remember we are on Euro AUD chart, which means we want to trade this chart. Okay, now to be sure that we are taking Euro AUD for either buy or sell, look at this symbol. Can you see, guys? Look at this symbol. So this symbol right here must be showing Euro AUD. It must be showing Euro AUD. Now, once you click on this drop down arrow, we have all of them listed right here, but we are trading Euro AUD. So if after you have clicked on new order and this dialog box comes out, what you are seeing right here is different now we have AUD USD. If what we are seeing right here is different from this one, it means this one is not correct. So you want to click on it, then select the appropriate one. This one must match with this one. So that means you are looking and trading the right chart. I hope this is clear. Please, I want you guys to follow me bumper to bumper. I want to be sure every information is super clear to you, please. I want to be sure. Now, that is the number one thing. Number two, we have volume. Volume. Right here, this is where you put in the lot size. And guys, please and please, please, I want to beseech you. This is where a lot of newbie blow their accounts. This is where the problem starts from volume, lot size. This is where it starts from. You cannot imagine someone who has $100 opening one lot. That means the account will blow in just 2 to 3 minutes or maximum 10-15 minutes. It's going to get blown depending on how market moves faster. So this is where you get it, you mix it. Don't ever make any mistake right here. Now, this is where you type in the lot size. If you intend to put 0.02, make sure it is the 0.02. Don't mistakenly type in 2. Okay, don't mistakenly type in 2. Look at this is 2 standard lots. 2 standard lots, not even 1, 2. Okay, so you can see the difference between 2 and 0.2 is very, very different. So don't ever make that mistake. Be sure of what you are typing in here. And as you are typing this here, this is going to be in proportion to your account balance. Please don't make that mistake, guys. Now, I'm going to teach you guys the basic money management. That is important. Now, if you have $100 in your account, $100, let's say you have $100 in your account. Okay, your capital is $100. The lot size to use is 0.01. Okay, on a single trade. If you want to open another trade, you are going to use 0.01 again. Okay, and as a matter of fact, do not open more than 2 trades at a go. If you want to open more trade, ensure one of these trades has either closed in profit or loss. I don't know if you are following, guys. Be sure that one of these trades has either closed in profit or loss. So if you have $200, then your lot size is going to be 0.02. Okay, which means for every $100 you have in your account, it is 0.01. So if you have $1,000, it means you are going to use 0.1, one lot size. Okay, so every $100 is equivalent to 0.01. So if you have $200, each trade, the lot size to use on each trade is going to be 0.02 for $200. So you have $300. The lot size to use is 0.03. Okay, so every $100 in your account is enabled to pick 0.01. Okay, so if you have $100, do not open more than 2 trades running at a go. If you have $300, $200, do not open more than 4 trades at a go. Max. Okay, if you open more than that, it means you are exposing your capital to get blown. All right. If this is clear, please guys, type in clear in the chat before I move further. This is the money management part of it, and this is powerful. You must not joke with what I've just shared with you. Otherwise, you are playing with fire. Please let me know if this is clear. Somebody should type in something in the chat. Let me be sure this is clear to you guys. And if you have any question, please let me know. Let me know as we journey. Let me know if you have any questions. So remember, Each $100 in your account is entitled to 0.01 lot size per trade. All right. So now that is it. So don't ever make any mistake right at this point. Don't mistakenly type in 0.5 instead of the 0.2. So you need to double check this one before you click either sell or buy. I hope this is clear. Now, the next one we have right here is stop loss. Okay, we have take profit. This is where you type in your stop loss. This is where you type in your take profits. All right. For comments, you don't want to put anything there. All right. Now, this is it. We are still going to come back into this one and this one. Now, on type, we have market execution. Okay, and we also have pending orders. But for the purpose of this class, I'm going to talk about market execution. Okay, because pending orders alone, treating this one alone takes half of the class. So we have this one covered very well in our advanced class. So there's no way you learn it and you not understand how to use all of these things. So we would have loved to do all of these things right here, but because of our time, so I'll be stopping on market execution alone. So market execution is that you are buying or selling with the current price. Okay, if I should click on sell or buy right now, it means I want to sell. I want to pick in the current price. I'm using the current price. But if I'm using pending orders, it means I want to set in my own price. Okay, which means I'm not happy with the current price. I want price to either come to where I want before I go into the trade. That is what pending order means. Okay, for those of you who are new, because I know there are some traders in the house who are already familiar with this, but no knowledge is wasted, guys. So for the purpose of pending order, it means you don't want to take the current market price. You either want market to go up to fill your order before coming down, or go down to fill your order before going up. So that is what pending order is all about. All right, I hope this is clear. That is what pending order is all about. But for market execution, it means you are using the market price. So when you see on any platform, they write MP, market execution, or EP, entry price, they are talking about the price at which you are going in. Okay, market execution or instant execution. Market execution or instant execution, it means the same thing. Now, how do you place a buy? How do you place a sell? Let's, for example, I have done my analysis on Euro AUD. On Euro AUD right here, I've done my analysis. And my analysis based on our strategy says I should sell. So before I click on sell, I must have calculated my lot size. Okay, which means if I have $100 in my account, I am to use 0.1. Okay, because the strategy says it is time to sell. So the next thing I'm going to do is right now is to click on sell. As you click on sell, this is what you see. Look at. Can you see right here, guys? Look at. I've already sold this. So with the hope that market should come down right from here, market should go down. All right. So that is it. Let me close this out. We have a lot to share, guys. Don't worry. I have a lot of pending orders right here setting up. Okay. So look at it. So I've taken the trade and we expect it to come down. So for a buy, after I've done my analysis and I entered my lot size right here, then I'm going to click on buy. Okay, it means my analysis says that market is ready to keep going up. So I'm going to click on buy after the strategy says I should buy. I'm going to click on buy. Once I click on buy, we wait for it to initiate. Look at saying buy right now. I've already bought it. Now I'm expecting this to go up to hit my take profit. Okay, I hope this is clear. Now I'm going to share something with you guys. If you are to take a trade, let's say you want to buy. Now, please guys, those who are new, please pay attention to this. Let's say we want to take a buy. Our strategy says we should buy. Let's say we have taken the trade right here. We have bought it right here. The moment we buy, we are expecting price to go up. Okay, we are expecting price to go up. Now, where will I place my stop loss and take profits? Where will I place my stop loss and take profits? If I am buying, my take profit will be above my entry price. Remember, this is my entry price, EP. Entry price means where I enter the trade. Where I enter the trade, okay? Because I have just bought it. So once I bought it, I expect it to go up. The moment I buy it, I expect price to go up. So our take profit is going to be above. All right? It's going to be above. And stop loss will be below. SL. Stop loss will be below. Please write this thing down. Make a diagram in your notebook. Those who are new, make a diagram in your notebook. You need this. I'm telling you, you need all of these things. You need it. If you are buying, you are taking your profits above and your stop loss below. Okay? The stop loss in the sense that if market did not go as your strategy says, then it's going to come down to take you out in small loss. Instead of having exposing your balance, instead of exposing everything to this one trade, because without stop loss, it means market is going to keep going down until this money finish. Okay, but once you have your stop loss in place, you are either going to lose like $5 out of this, $5 or $7, depending on how wide the stop loss is. I hope this is clear. Now, let's say you are selling. You want to sell. Let's say you have sold right here. Okay, and you expect, which means you are expecting price to go down. So once you are selling, your stop loss is going to be above. Stop loss, SL, is going to be above. And your take profit is going to be below. Take profit, TP, we call it TP. Okay, it's going to be below. You can see it's the opposite side of this, which means the moment you take this trade for itself, which is what your strategy says, you are expecting price to go down. Okay, you cannot expect your take profit to be above once you are selling. Market will tell you incorrect. Okay, it will say incorrect if you are setting it. I'm going to show all of that to you, how to set that on the platform right here. Okay, I hope this is clear. So if you are buying, your stop loss will be below, your take profit will be above. And if you are selling, your stop loss will be above and your take profit will be below. Okay, so the take profits are the numbers you are going to set, the take profit numbers and the stop loss numbers. The same thing with this one. I hope this is clear, guys. Please let me know in the chat. Let me know in the chat. If you have any question, please signify. We need to move. Signify, guys. If you are with me, let me know if you are with me, guys. Let me know if you are with me. Let me know if you are with me. Still waiting for more response, guys. All right, thank you so much. Thank you so much. So let's keep moving. So that this is what you want to put into consideration, guys. You need to put all of these things into consideration. So let me just clear all of these things out. So we'll do more experiments. Do more. Okay. So now let's talk about how to enter, take profits, and stop loss. Now, let's say we want to go in at this price, okay, which is at where's my pencil? Let's say we want to buy at 1 point, we are using this price 1.5729 5729. All right, that is our entry price, guys. Now let's say we want to use 10 pips as stop loss and 20 pips as take profits. Now stop loss SL 10 pips. Okay, we are going to calculate all of this, don't worry, so that we can get the value right here. Take profit, tick P, 20 pips. Okay, 20 pips. Now, how do we calculate all of these, guys? Look at the entry price, look at the stop loss, look at the take profit. How do we do this? Because this is your stop loss, this is your entry, this is your take profit. You want to take 10 pips out of this. Take 10 pips away from this one. Then you're going to have your stop loss value. Now, how do you do it? A simple way of doing this, guys. Please keep following this. This is very, very crucial. A lot of people will miss this. A lot of people will miss this. And before I go deeper, remember, look at this right here. This, we have the fifth number. You can see the fifth number keeps changing rapidly. Take a close look at it. The fifth number keeps changing rapidly. That is the point which we talked about during the, I think yesterday or so, we talked about points. So once you are calculating your pips, you don't need all of that. You don't need it. But in our advanced course, we went deeper on how to calculate with points and with pips. But for the purpose of this class, I'm going to use the pips alone because of our time. All right. So now, how can we calculate this? You want to take 10 pips away from this. Now, somebody should take 10 pips away from this. Take 10 away from 1.5729. Take 10 away and give me the value. So the value you get is going to be your stop loss. I want to be sure if you guys are following, but I'm telling you, you're not going to get it right because of these decimal points. Now, this is how you're going to do it. We have 1.5729. This is how you're going to calculate it. If you should calculate, okay, now let me get you on the right track. Somebody should calculate 1.5729 and take away 10. Take away 10 and give me the answer quickly. I want to be sure you guys are following. Calculate this and take away 10 out of it. I want to be sure you guys are in class and following. Still waiting. I want you guys to do that under 30 seconds. Still waiting for others to put in theirs. Yes, Mr. Latini, that shows that you've been in the game. That's fine. Good. I can see Mr. James is not getting it right. The reason why you are not getting it right is because of the decimal point. That is the point I do. That is exactly what I want to share with you right there. Now, this is how to calculate it. Now, this is the entry point. This is how you do it. Instead of putting in the 1, just ignore the 1, okay? Just remove the decimal points completely. Then you now write 1, 1, 5, 1, 5, 7, 2, 9. 1, 5, 7, 2, 9. Then take away 10. Then you have 1, 5, 7, 1, 9. Look at it. Then you just return the 10, the decimal point back into your answer. It's as simple as that. That is one of the simplest way to calculate it. Yes, 15,719. That is it. Then after the 1, you return the decimal point to it. Just return this decimal point. So this value right here is going to be your stop loss. All right. I don't know if this is making some sense to you guys. So after you finish the calculation, return the decimal point. But if you want to calculate it, you want to take it away with the decimal point, you are going to get the wrong answer, just like Mr. James just put in right here. All right, that is fine, Mr. George. So take away, just remove the decimal point completely, then take 10 out of the number. Once you get the right answer, then return the decimal point back to where you removed it from. It's as simple as that. Do this on any pair, either Japanese yen pair or any other regular pair. Do this, you get the right answer. So now, for the take profit, you are going to add 20, all right? Because we are saying price should go up. Remember, you have to subtract your stop loss from your entry price. This is your entry price. Don't forget, this is your entry price. You subtract your stop loss from your entry price, and your take profit, you add it to your entry price. Now let's calculate the take profit. So you add 20 pips to this number. All right. So the same way you do this one, you're going to do this. Instead of subtracting, then you go to add to it. So it's going to be 1. Okay, let's 1, 1, 5, 7, 2, 9 plus 20. Okay, plus 20. It's as simple as this. I hope this is clear. Then this is going to be 9, 4, 7, 5, 1. Then simply return the decimal point back to it. Then this becomes your take profit, 1.5449. All right. I don't know if this is making some sense to you guys. Please let me know in the chat. I want to be sure I'm communicating with you guys. Thank you so much, Mr. George. You are on point. You are on point. This is one of the simplest and easiest way to calculate stop loss and take profits. It's as simple as that. Easiest way to calculate it. Good. Thank you so much, Mr. Shegu. This is the simplest way to calculate it. But we went extensively during the professional course. We explained this even better than what we have done right here. Reason is simply because we have the luxury of time to do that. Okay, and all what you've seen right here is part of what you are going to learn, but with more explanation and how to even calculate your stop loss based on points. That is another way of calculating it based on points. You have a lot of tests you're going to go in right there to pass through right there to ensure that you get it right. No way you take our course and you will not be amazed with what you're going to learn. No way. There is no way. Okay, so now this is how you're going to do it. Simple way. Simply remove the decimal point, make your subtraction or addition, then you get the answer you want. Once you get the value, return the decimal point back to its place, then that becomes your stop loss or your take profit. Simple as that. All right, now let's go and initiate some trade with this. So we've been able to calculate this. Let's put in our stop loss right here. Oh, okay. So now let's initiate this. The stop loss is 1.5 because we are using 10 pips, 1.57, 19. Okay, take profit 1.5749. Now let's initiate trade with this. Okay, so click on this right here. This is what we have. I'm going to shift this so we can see this. Oh, shush. Okay, let's make use of it this way. I want to be sure we are seeing it clearly. Okay, now let's say we want to sell, we want to buy Euro USD. Okay. Now the symbol is showing that we are on Euro USD, the same with what we are seeing right here. This is a confirmation that we are trading on the right chart. Now we have, let's say we have $200 in our account, just like what we are seeing right here, $200. So I'm going to use 0.02 because I have $200. So each $100 in my account, each $100 in this demo account stands for 0.01. So if I have $300, I'm going to use 0.03 on this single trade. So because I have $200, I'm going to use 0.02. So now let's initiate that we want to sell immediately. Let's assume this current price right here is our entry price right here, because this one is moving. You can see it's moving because market is live, it's moving. So now let's assume this is our current this is the current price, okay, 1.5729. So now for us to buy this, let's put in the take profit and stop loss. The first thing you want to put in is take profit. So you are going to type in this number after you've made your calculation. You're going to type it, which is going to be 1.5719. Okay, that is your stop loss. Leave the last digit right here, the 5th decimal number, as 0. All right, leave it as 0 because you did not make your calculation right from there, because that is the point and that moves rapidly than the normal point. So you are concerned with this 4. I hope you understand. We explain more about this point during our professional course, So you learn more about that in our professional course. So once you put in your stop loss, the take profit, you're going to type in the number. You have your take profit for your take profit right here as 1.5749. All right. So once you have that in place, then because we are taking market execution, which is instant execution, okay, provided we have this number as the current market price, then we click on buy. You can see it's initiated already. All right, let me put it on 5 minutes so we can see it. Look at, can you see this is our stop loss? Look at, it says SL. Look at right here, TP, which means take profit. I hope this is clear, guys. Now beneath here, you are going to see your trade order. Okay, this is where your order shows beneath here. This is where you see your order. Once you take a trade, either buy or sell, you see it right under this place. This is where you'll be able to monitor your trade. So if this trade right now should go in our favor, moves all right here to this place to touch this take profit, then this is going to close in profit and we'll bank in the profit. But if peradventure this moves right now, it does not go up again and comes down to eat the take profit, then it means we'll be held in small loss, right? So that is why most of the time you want to pick in a trade that will give you more profit than what you will lose. And by the grace of God, the strategy I'm going to show to you right now is going to is a strategy that you can get minimum of 1 to 2, 1 to 1.5, 1 to 4, 1 to 5, which means you are risking one to get 2 or 3 or even more. I hope this is clear, guys. Please let me know if this is clear. Let me know if this is clear. Now, we have opened this trade. If this trade should go and hit the profit, it will close automatically. And if it should come down to hit the stop loss, then it will also close automatically in loss. But if it should go up to hit the take profit, then it will close automatically in profit. Right? We also have money management where you can be able to I say money management, trade management, so be able to manage your trade along the way. We have all of these things covered in our advanced course. These are really, really powerful. Trust me, they are really, really powerful with a lot of questions from students, and you know, that's something that will ensure that you learn it the right way. That is it. So I hope all of this thing is clear. So now let's say we have opened this trade. Probably you want to close it. The next thing you want to do is come open this tab. Okay, how can you get to open this tab? You can click on Control T. Control T. Okay, if you do not have it enabled, click on Control T. Look at, I'm pressing Control T right now. Control T, or go up here. Look at this. You can point to all of these things. All of them have their functions. As you click on this, says create new one, profile, market watch. This market watch is for this one. It's for what you are for the symbol. So if I should click on it, you can see it disappears. Click on it, it reappears. So now for the terminal, this is the terminal. You click on this one. Look at, it says terminal, which is also Control T. I hope you can see. So once you click on it, it disappears. Click on it to reappear. So that's where you see, under terminal is where you see your trade. Okay. Now you can just simply click on close. If I want to close this trade, probably I make a mistake, or maybe I'm not interested in that trade again, or maybe I'm in some profit and I'm okay with that profit and I want to close it, or maybe I'm in small loss and I feel this is not going to return back to profit and I want to close the trade, then you can simply come here, click on this cross, all right? Or simply right click on this trade, right click on it. You can see I'm right clicking on it right now. Right click on it, then click on modify or delete. Let's click on delete. Once you click on delete, this is what you see right here. Okay, because this is a dialog where you can just choose to close some trade or modify some trade, but because this one is not active right here, so this is mostly used to modify trade. All right, it's mostly used to modify trade. So you can simply come, I expect this one to give me delete button, but it's not active. I don't know why. So you can simply click on this cancel button right here. Look at, click on it. Once you click on it, it disappears. Close either in profit or in loss. I hope this is very, very simple to understand, guys. Okay, so now I've been able to share how to place a trade, Okay, I've been able to share how to take profits and how to enter, take profit and stop loss, how to close the trade, and how to use basic money management. And I've been able to cover the stop loss and take profits, how to calculate this. You don't even need to forget anything on how to calculate your stop loss. If your stop loss is not entered correctly, probably what you need to enter below, you put it above. The market will tell you incorrect. So let's make an explanation. Let's make a trade for that. Let's say we want to sell right now, okay? And we have the take profits. No, let's say we want to buy. Instead of putting in the stop loss right here, let's say we mistakenly put the take profit 1.5749. Okay, remember this is our stop loss and we are entering take profit value right here now, which is above our entry price, market will say invalid. Obviously, it will say invalid. Now let me buy. You will see. Look at it will say invalid. So if something is not right, it will say invalid. Once you get invalid, sell, stop loss, or take profit. It means something is wrong. You need to check your stop loss and take profit. So it will not open the trade. All right. So don't get confused right there. I hope you understand, guys. Please let me know if that is clear with you before we go into the strategy. Please let me know. Please let me know if this is clear, please. I need to hear from you guys. Please let me know. Okay, somebody said right on. All right, I appreciate that. Okay, that's fine. Okay, so that's it for this. So let's go into the strategy. So how can we, let me quickly go back into our slide so you can take a glance on the parameters we need to use before we come back into the, just few seconds, trying to clean all of this away. Okay, guys, just ensure you write all of these things down. So you're going to follow me as I explain this very well. We have about 30 to 40 minutes to spend on this in this class before we call it a day. Let me know. Okay, so make sure you follow me. I'm going to go back into the chart right about now. Take a screenshot or write it down somewhere. Let me know if you are done, because you're going to follow me. It's important you follow me. You ride along with me as I take all these things so that you don't get to miss anything along the line. Please ensure. Okay, I hope I can take this away, guys. Okay. We also have one indicator that is missing, stochastic. We also have stochastic that is missing. Okay, so let's go into our chart, please. Okay, so the first thing we want to do right now, you already know how to calculate your take profit, your stop loss. You already know when to buy and when to sell. So it is important you have the strategy to use, because you can't just go into the market blindly. And trust me, believe my word, this strategy I'm about to share with you has over 75% win rate. As a matter of fact, I've just taken 2 trades on this strategy and today, and it has delivered about 3% profit. So the first thing you want to do, we have 4 indicators that you want to bring out. Okay, it's actually 5 based on the upgrade we have done a few months ago. I think early this year. Okay, so the first indicator you want to bring out is EMA 5. All right. Okay, let's bring out EMA 120 first. That is the higher EMA. So now how can you get the moving average? EMA stands for exponential moving average. Then what you need to do is to click on this cross right here that says indicators. Click on it. You have this drop down. So on this drop down, click on trend. Point to trend. Under trend, you see moving average. Click on it. Once you click on this, is the dialog box you have. So the settings for this is 120. Number 1, 120 EMA. Okay. You change it to exponential. Click on this MA method. 120. Okay. You can enlarge this depending on what you want. Choose any color, but we are going to leave it as red. So once you have all of this in place, click on OK. Once you click on OK, you can see we have the moving average. What is the function of this 120 moving average? This is a trend moving average. This is used to determine the trend. All right. Now, how can we use this moving average? Let's say we want to trade on 1 hour. Okay, we want to take a trade on 1 hour. Let's say we want to take a sell trade. Now, Once you see that all the candles are below this 120 moving average, this is telling us that we should look for a sell. All right, this is telling us that we should look for a sell. Now remember, we want to take a trade based on 1 hour. We also have higher time frame that we use as a filter time frame. Now this is it. You want to use the next candles, the next time frame as the filter time frame, and the next time frame to this is H4. Okay, go on H4. What is H4 telling you based on this? It's telling you that price is going down. So you want to be sure that before you take a trade on H1, H4 must also be telling you that price is going down. Okay, if on H4 price is above and it's telling you that price is below on H1, there is no trade at all, which means both time frames do not agree. So it means these two time frames, H1 and H4, must agree, because we want to go in on H1. We want to take a trade on H1. I hope this is very, very clear to you. So that is the explanation on the 120 moving average. So the next two, let's bring out more moving average. Click on this, on the cross, go to trend. You see moving average, click on it. Now let's bring out 12 EMA, 12 exponential moving average. So I'm going to use, okay, it's still exponential. I'm going to use, leave it at close. I forgot to mention both the 120 and 12, everything, all the moving average is going to be applied to close. Okay, so let's take this to, let's choose blue. I think blue should be fine. Let's choose blue. Okay, let's choose this color. Okay, click OK. Now we have this. Let's bring this, the third moving average. The third moving average is 5, period 5. Period 5 exponential applied to close. So let's pick yellow for this. Okay. Okay, fine. This is it. I hope this is clear enough. Now, how can we utilize this? You want to take a sell trade when you see the cross between the yellow and the blue moving average to the downside. Okay, I hope you're following, guys. You want to initiate a sell trade once the blue moving average, sorry, the yellow moving average crosses to the up, then on its way down, then you take your sell trade. All right. Now, the first entry says 120 moving average is above the price. We have these candles below the 120 moving average. So which means price is going down. For us to take the trade, we need to wait for this cross, for this yellow moving average, which is 5 exponential moving average, to cross up. Then on its way down, once it crosses down, immediately the cross is initiated, then we take our sell trade. Let's assume we have the cross right here. We take our sell trade. Once we take our sell trade, then our stop loss is going to be above here. Okay, we'll talk about stop loss later on. Let's bring out the next indicator. The next indicator I want to bring out is RSI. So click on the same plus sign. Go to oscillator. Under oscillator, you see RSI, relative strength index. Just carefully look at it. Look at it. Click on it. You have this dialog box. On this dialog box, the period to use for RSI, under this period right here, type in 21. 21, guys. 21. Then leave it, apply to close. Okay. I'm going to tick this one to be visible. Now, under level, come to level right here. Under level, look at. We have 30 level, we have 70 level. What is the work of RSI? We've explained this yesterday. RSI is an oscillator that swings up and down. It's like a pendulum that swings up and down. You know all this pendulum, you know how pendulum works, like all this ancient clock with the pendulum that swings left and right, left and right. That is how oscillator works. So when it swings up, it swings down again. So it can never keep going up forever. So it will go up. Once you get to a certain level, it drops again. So that is the work of oscillator. So that is why you have the level 30 and 70, which means once price pull up to 70, it's above average, then it's expected to drop again. But for the purpose of this strategy, we are not using 70, we are not using 30. All right? What are we using? You either just highlight it, click it like this, click on delete, click on delete. Then you want to add your own, you add level 50, click on add. In this space, type in 50. Okay, type in 50. You have it already. Let's change, let's make this one bold. Okay, let's leave this at this. Okay, I hope this is clear, guys. Then click on OK. Remember, don't make mistake. Period 21 right here. Leave it at close. Level 50. Then click on OK. Once you click on OK, this is what you have. All right, great. It's making some sense. Now look at it, guys. Anytime this RSI is below this 50 line, it means market is going down. Anytime it's above the 50 line, it means market is going up. Okay, now the strategy says if this is coming down, right as we see now, the cross happen right here, it's telling us that market is going down. If at this point, at the same point right here, RSI is above, it's above the 50 line, there is no trade. I don't know if you are getting it. There is no trade. Okay. Now, this is the condition. Condition number 1. EMA 120 must be below candlestick on H4. We are talking about sell bias right now, guys. We are talking about if you want to look out for a sell. Now, let's say this. I'm going to explain this better before we. Okay, let me put in another chart that has clear cross. Great. This one is okay. This one is okay. USD, Euro USD. Now look at the cross right here, guys. Can you see? Now let's say we have the cross around this place. The cross happen right after this candle. You take your trade right on this candle. The first condition for this is this. After this cross happen, before you take a trade at all, because it is after this cross you are going to take your trade. It is after this cross, don't get it twisted. It is after this cross you are going to take your trade. But before you take this trade, the first thing you want to do is that, oh, sorry, I'm looking at H4. We should go on H1. Okay. Sorry, I was looking at H4. I thought I'm looking at H1. Okay, now look at this. At this point, we have the cross. Now, the first condition sorry, should the 120 be below or above candles for sell? 120 is definitely going to be above. So now, let's say we want to take our sell trade on H1, all right? For you to consider that you want to take a sell, it is after this, the cross between the yellow and blue EMA. The yellow and blue EMA, the cross between them to the downside will tell you that now trade is happening. That is condition number 1. For you to take that trade, you go on H4. On the same line where I have this vertical line, you take a look at 120 moving average at this point alone. Do I have 120 moving average above the candles? Yes. This is to confirm, higher time frame is to confirm to us that market is truly going down based on what our H1 is telling us. Remember, we want to take our trade on H1 and we are using H4, the higher time frame, as the filter time frame, as the trend. So for us to determine a trade, to take a trade on H1, once we see the cross happens between 5 and 12 on H1, then you quickly check on H4. What is this telling us? If H4 says that 120 moving average is above the candles, is above the price, then price is going down. That is condition number 2. Remember, condition number 1 for a sell, 5 and 12 moving average must cross to the downside. Condition number 1. Condition number 2, 120 moving average on higher time frame must be above the candle. I take the condition again. Condition number 1, EMA 5 and 12, exponential moving average 5 and 12 must cross from up to the downside for a sell. That is condition number 1. Condition number 2, on higher time frame, H4, 120 moving average must be above the candles, which is what we've seen right here. That is condition number 2. You go back to H4, your entry time frame. Condition number 3, take a look at 120 moving average on H1. What do we have right here? 120 moving average must be above the candle, which is what we are seeing right here. That is condition number 2. 120 moving average must be above the candles on H1. All right, that is condition number 2. Condition number 3, RSI must be below the 50 line. Now take a look at this closely, guys. RSI must be below the 50 line. On the same spot, look at this. Take a look at this, guys. Take a look at this closely. Oops. Take a close look at this. Where I have this vertical line, do we have the 120 moving average, sorry, the RSI below the 50? Not yet. You want to wait until it closes below the 50, until the next candle closes below the 50. Okay? You can see it's already approaching the downside. So RSI must also be below the 50. RSI, condition number 3, RSI must be below the 50 line. That is condition number 3. If that is clear, please let me know in the chat. Now, at this point where we have this cross on this very candle, RSI is not yet below the 50. Then we ignore this trade. We ignore it. Or you either wait until the next candle close and you can see RSI is clearly below the 50. I don't know if this explanation is making some sense to you and this strategy is getting clearer to you guys. Please let me know if this is clear to you. Please let me know if this is clear to you, please. I need to hear from you guys. Okay, thank you so much. It says clear. Okay, it's getting clearer. All right, that's fine. Yeah, I assure you rewatch it. It's going to make some sense. So look at it. Once you see that, somebody said partially, okay, you're gonna get it better, don't worry. So you want to wait until the next candle close below it. Then after it, you're going to take your trade. So the condition says 120 moving average must be below the 50 line. Okay, so everything must be in alignment. All right. Now let's take a look at this point. We have the cross right here. Let me enlarge it. So make use of that angle. Take a look at this, guys. Can you see? Look at the first thing, the first condition right here. 120 or 5 and 12 moving average has just crossed from the upside to the downside. That is condition number 1 for a sell. Now to look out for condition number 2 on the higher time frame. Where is our 120 moving average? 120 moving average must be above the candle, which is what we are seeing right here. You can see to the downside. You can see that is condition number 2. Condition number 3, go to H1, which is the time frame you are taking the trade. Where is our 120 moving average? Do we have price and candle below the 120 moving average? Yes. Look at this vertical line. We have the candles and price below the 120 moving average, which means both H1 and H4 are telling us that we are in the downtrend. All right. So now that is condition number 3. Condition number 4, right on this very candle. Okay. You wait for this candle to close. You wait for this candle to close. So the beginning of this candle is going to be your entry because this is where the cross is happening. So you wait for this candle to close. Okay, take your trade on this one. Now we have this vertical line, the beginning of this candle. We have this vertical line. Where is our RSI? RSI is below the 50 line. It's a good trade for a sell. And now you can see, once this candle opens, price has been going down. Even we have a cross right here. You can see price try to go up, but it does not go to hit our stop loss. So that is condition number 4. You actually need 4 conditions to take this trade. All right. I hope this is making some sense, guys. Now, where do we put in our stop loss and take profits? Our take profit is going to be on the last high. We are talking about sell. So this is where we are taking our trade. Sorry, guys. I just want to try to enlarge this so you guys can see. We have taken our trade right here at the beginning of this candle. So you wait for the current candle that initiates the cross to close. So you take your trade immediately that candle close. Okay, so our stop loss is going to be at the last high, just 2 pips above the last high. All right, I hope this is clear. Then our take profit is going to be double of this. The distance between our entry and take and stop loss is going to be ×2 of our take profit. Okay, which means we have used from here to this place, we have used just 22 pips. So our take profit is going to be like 44. You can use 1-to-1, which means you can use 22 pips to make 22 pips again. You can use 22 pips to make 22 pips stop loss. 22 pips take profits or more. But the strategy says if you put your stop loss above right here, your next take profit is going to be at the last low, which is here. Okay, your next take profit is going to be at the last low, which is here. This is the last low. I hope this is clear. So most cases you're going to get more than 1-to-1 on this strategy. But when you are able to catch a long trend, you should be able to catch 1-to-4, 1-to-3. So by virtue of risking 22 pips right here, our take profit is going to be about 28 pips or 30 pips, which is even more than 1-to-1. I hope this is clear. So the strategy rule says your stop loss in the case of sell should be above the last high. Your take profit will be at the last low. This is the last low because market is expected to at least come into this place. If ever, it's going to reverse to the upside. All right. So that is why you want to have to take profits. So when you divide your lot size into two, you pick in first target right here, while you can target something bigger to the downside for your second take profits. I hope this is clear. Okay. This is a strategy that works pretty well, guys. No doubt about it. So that is it. I hope this is clear. I still have one more thing to share with you on this strategy for the continuation part. But this is the beginning of the strategy. This is the beginning of the strategy. With this alone, you are good to go. Believe me, this is absolutely on fire. We have several videos on our YouTube channel that explains everything about this strategy and even more. All right, somebody is trying to raise his hand. Let's hear Mr. Emmanuel out. So you ask your question quickly before I check into the other side. So we have about 20 minutes to 15 to 20 minutes to round up this session. Mr. Nomes asks a question. Okay, you can answer a question. Good evening, sir. Mr. Nomes, unmute yourself and ask a question, sir.
Hello, good evening, sir.
I celebrate you, sir. Good evening, sir.
Thank you so much for this lecture. It has been helpful. I'm very grateful.
All glory to God, sir.
Okay. Please, for instance, where the candles are, let's say there's a jump between those candles.
Okay.
For instance, there's a jump in those candles, and you went to take your take profit in between those candles. What is the risk involved in it?
You're talking about jump, right? Let's say the cross happened right after this candle. You can see this candle, is the candle that is initiating the cross. You need to wait for this candle to close. Immediately this candle closes. If there is a jump between this candle and this one, you wait. 89 to 99% of the time, when there is a jump between candles, price is going to come back to cover up for the gap first before it continues its direction. So if there is a gap between here, just wait for price to come back. You may start putting your pending order right here at the beginning of the gap. Let's say there's a gap right here. Let's say this candle, this one right here. Let's say this candle started from this place. Okay, from where I have this small vertical horizontal line, this candle started from here. You can put your pending order right here at the bottom of this candle, because this gap is going to get filled. Price is going to come back to fill it before it continues to the downside. 90% of the time, price will come back to fill it. Okay, but nevertheless, this strategy is a strategy that never lacks signal. It never lacks signal. Okay, if you take a close look at 10 trades in a week, believe me, trade it accordingly. Out of these 10, you should be able to win nothing less than 8 out of these 10. All right, I hope that answers your question, sir. I hope I've been able to answer your question, sir. Okay, so anyone with another question? So let's keep moving. I still have one thing to share with you about this strategy. So now this is the beginning of this strategy. Now we have one more indicator to share with you based on this strategy. Just a few seconds. So the indicator to want to share with you is go to the same cross, go to oscillator, then take a look at stochastic oscillator. All right, click on stochastic oscillator. We'll come back there, Mr. Shegbu. I know you have a question. Okay, now click on stochastic oscillator. On that, you want to put in this setting 1433. 1433. change this to 14. Leave this at 3. Leave this one at 3. All right. Do not change anything. Okay. Either you want to change this to ticket or something, but the setting right here should be 1433. All right. Once you have that in place, click on OK. This is what you have. This is what you have. What is the function of stochastic in this strategy? The function of stochastic is to give us a continuation entry. Continuation entry. Okay. This will only help the traders that cannot recognize candlestick pattern. So this is why this strategy is for everyone. This strategy is for everyone. So because a lot of traders cannot recognize candlestick pattern, so this will help you to pick a trade. So now, let's say you want to pick a trade. How can we locate the continuation entry? The continuation entry is basically on stochastic. All right. Now, we already have all the constitution in place. Let's look for a trade with continuation. Let me look for a clear one with continuation so you can understand. Okay, right there, right there. I think I have one right here. Now, let's say the cross happened right here. Good. I have a good explanation right here. The cross happened right on this candle. After this candle, you take your trade. Let's say you were not there. Once this trade up, this signal happens, you were not there and price has even moved down. You missed the first entry. The next thing you want to do is that wait for stochastic. Okay. If you really understand candlestick pattern, you want to wait for price to go back up. To go back up into the 5 and 12 moving average, for price to pierce back into the 5 and 12 moving average, just the way you are seeing right here. Okay, then you wait for candlestick pattern that tells you price is going to go down. You wait for either a shooting star, bearish inside bar, bearish engulfing. Okay, those are part of 3 candlestick pattern that tells you that price is going to go down. So, but the first thing you want to look at is that if you miss this, wait for price to go back into the 5 and 12 moving average. All right. But if you see that the cross is happening to the upside, then you want to take the cross on its way down. But if price, as you are seeing right here, is trading in between the 5 and 12 moving average, then that way you wait for candlestick pattern, a bearish candlestick pattern like bearish engulfing. But if you do not understand that, the next thing you want to look at is that wait for stochastic to cross. Okay, right. Look at, we have the candlestick pattern right here. So you want to look out for cross on stochastic right on this spot. Look at, we have the cross happen on this candle. So cross on the stochastic. So what are the conditions you're going to look right there? The only condition you are going to omit if you are taking stochastic signal is just the cross. You are not going to mind the cross again. You are going to consider the 120 moving average on H1 and H4. Then you will consider RSI condition. All right, RSI must be below, 120 moving average on H1 must be above, and it must also be above on H4 as well. Okay, then immediately the cross happens between the stochastic, then take your trade, take your sell trade, and your stop loss is going to be right above here, just 3 pips above the last high right here. Then you can see right after that price went down. Okay, we have more videos, detailed videos on our YouTube channel that explains a lot about this strategy, different videos. So there's no way you want to watch 2 videos that you won't get any explanation you are missing. Someone said my network is bad. I can't hear you very well. Please, can I get the video? Of course, the video will be available, but I can't just say how soon it's going to be, but we'll try to make it available in the next few days. We'll try to make it available, Mr. Onome, don't worry. We'll try to make it available. All right. So I hope this is clear. So that is how you can use stochastic in case if you miss the first entry. But for those of us who can understand candlestick pattern, you don't need to take a look at stochastic. All right. You can either use stochastic or wait for candlestick pattern, like a bearish engulfing, a shooting star, or a bearish inside bar. All right, you can see after the engulfing price went down. Look at, we also have continuation right here. After this bearish engulfing, look at the same point, after the candle, we have stochastic cross. Look at, take your trade. Price went down. We have stochastic cross right after this one too. Take a look at. Right after this one too. After this candle, you can see, look at, price went down. There's no way you will take the trade and you will not win. Look at, we also have the continuation right here. After this very candle, you can see stochastic didn't cross right here after this candle. You can see there was no cross on stochastic. So you wait for the cross to happen, which is right after this candle. You can see what happened right after that. Price went down. Okay, so you can see right now, take a 17 pips stop loss, take 30 pips profit, which is almost 1 to 2. All right, so I hope this is very, very clear, guys. But remember, nothing is 100% in Forex. That is why we have our weekly analysis, and the weekly analysis has been helping a lot of people. It has been helping a lot of people. Pending the time you master the whole thing. All right, but it's important you learn the strategy. This is a strategy that can give you any amount you want. But the problem a lot of people have in the market is that they are switching up and down on strategies. That is the problem. They are switching up and down on strategy. So if you have any question, please let me know in the chat. I think our time is fast spent. Please let me know in the chat. Let me know in the chat. So for those who want to take the course, I take this again. You have a lot to learn. You have a lot to learn. So for those of you who are right, who have taken this course, we are giving you a discount, additional discount. Mr. Onome, please chat with the admin. The video will be made available to everyone. So for those of you who are here, just few seconds. Okay, so for those of you who have attended the class, if you want to take our advanced class, okay, with our pre-recorded video, 19 videos, and each of these videos is not less than 1 hour 30 minutes, and most of them is over 2 hours on each. So the 19 videos is downloadable, so you can download it and keep it to yourself. But remember, there is copyright on it. All right, so you're not advised to share it with anyone. And another thing is that this video, in the nearest future, in the next couple of months, we will not make it available, we will not make it downloadable again. So anyone who come in for this advanced class, we only have the privilege to watch it. Okay, we will not have the access to download it. And after that, you have 1 month mentorship, which is once a week, 4 times in a month. So, and each of the class is going to be minimum 1 hour, which means you can also have close to 2 hours on each session. So during this mentorship, whatever you are lacking and you feel you don't understand during the video, you're going to everything will be explained better. And believe me, there is no way you watch our advanced class video that you won't understand every bit of information. But the mentorship is basically designed to answer whichever question you have, and also to be sure that you are not making any mistake. That is what mentorship is all about. All right, and after that, you have 24-hour access to me anytime, any day. So if you need any help concerning your trading career, this will be an additional advantage. Okay, so, and the fee for this is $150, and we have a discount for the group, and this discount is going to end this coming Sunday, this next weekend. Okay, and the discount is $100. All right, And basically, for those of you who have taken your time to attend this class, it means you are willing to learn. You are ready to learn. So I have additional discount for you guys, additional $10 discount for you guys. So for those of you who have participated in this class, between now and next week Saturday, you can take this for $90 instead of $100. Okay. But how can I be sure that you attend this class? Because I know a lot of people have chatted with me that they won't be here tonight due to their work, and I can understand. 2 people have already chatted, 2 to 3 people have chatted that they will still be on the way, because I know they want to attend this class. So those people will have the option to attend this class. So with that, the code for this, when you are chatting with me, the code for this is what I've just put in the chat. I don't want to say it because people will still have access to this video. I don't want this code to be busted out. So write this code down, use it to chat with me. Then I will know you have the access to take this for $90 instead of $100. And the rate is $500 per dollar. All right, at 500, look at it right here at $500 per dollar. All right, so you're going to multiply that by 90. So this offer is going to close shortly, guys. So for those who are ready to learn, we have more strategy we've taught in our advanced class. More strategy, believe me, you have up to 3 different strategies that you can choose from. All right, that is one best advantage. All right, more than 5 strategies, actually, more than 5. So there's no way. We have price action strategies, a lot of amazing strategies that you can learn from. So guys, this is all I have for you because of our time, because I know a lot of people will still going to go to work tomorrow and we need to get prepared. So thank you so much, guys, for having me. So let's open for question and answer. Do you have any question? Please let me know in the chat or raise your hand so I can bring you up to ask your question before we call it a day in the next 2 to 3 minutes. If you have any question, please let me know in the chat if you have any question. Let me know in the chat. If there's no question, please type in no, everybody. Type in no, everybody. If there's no question, I want to be sure we're on the same page, please. I want to be sure we're on the same page. Type in no question. In the absence of no question, please type in no, type in no. If you don't have any question. Okay, thank you so much. No question. All right, I'll be waiting to chat with you, Mr. James. All right, thank you so much, guys. And look for the admin on any of our group, be it on WhatsApp or Telegram. Look for the admin, chat with the admin. Then we're going to continue from there. Thank you so much, guys, for having me. And remember, if you are here to join our YouTube channel, okay, and before I forget, let me paste this link to you again. The King strategy. Okay, you can watch this. You can watch this. Okay, sorry, somebody. Okay, I need to make it general. This link is for the King strategy. This strategy is just we just discussed. So it will help you more. It will help you more about the strategy. And don't forget, make sure you subscribe to our channel and share this with everyone. Thank you so much for having me, guys. I look forward to see you guys in the mentorship class. That is where the journey, the journey becomes more interesting. All right. Thank you so much. I appreciate you for being here for the past 3 days. I really appreciate you. I look forward to your success and to mine. And I look forward to work with you closely. When I mean closely, I mean closely. So your success, guys. See you guys at the top and not from the top. We see more on the group. Bye for now, and God bless you.